Very good afternoon to all. Welcome to Tally CA Connect. So, our today's topic of discussion is a very crucial one. We are here to decode the most critical challenges businesses face during the year end, that is the GST closing. So, from the last minute of mismatches to unclear the input tax credit positions, reconciliation, so it can all get very overwhelming. Our expert here today is CA Rupal Garg ji. So definitely he's been taking a lot of sessions at our CA community forum on WhatsApp, but it's his first debut at Tally CA Connect. So thank you, Rupal ji, for your time and suggestion of this very great topic to address on how this topic will be very important to take at this year time. And so a little bit on about an introduction for CA Rupal ji. So he's a practicing CA with extensive experience in GST, financial management, and even AI-driven automated accounting. He's a distinguished faculty member at ICI and speaker across various important forums, even government platforms as well. I've heard great stories and of his experiences. So I think we have a great audience to begin with. So we hope that this session is very helpful to address and identify the gaps early and avoid any errors and approach your GST compliance happily with confidence using TallyPrime. So thank you, Rupal ji, for this great idea. A very special welcome to you for a CA Connect for the first time, but definitely it's not going to be the last. So over to you. Let's start the session.
Thank you, Komalji. A very good afternoon and a hearty namaskar to everyone. Thank you all for joining. My gratitude and definitely my token of appreciation for Team Tally for having me and also doing this wonderful Tally CA Connect, where I'm told that every Wednesday we can actually rewind everything that we have been learning and probably come back as students and learn a little more in Tally. And of course, Tally is sort of I should say, it's an ocean of knowledge. And as we gather here to learn more and more things, definitely we learn something new every time. My dear colleagues, the topic today is, as you all know, GST year-end checks. Now, it's very important why we actually have connected for this particular topic. Let me very quickly share a very brief presentation, which I'll be discussing upon. What are the things that we'll be discussing upon? Also, why year-end compliances actually are relevant for all of us. Now, as all of us are tax practitioners, accounting professionals, we all have been dealing with all the compliances throughout the year. What special do we need to do at the year end? Today, the date being 25th of March 2026. So about 6 days are left in this year. And can we do actually something significant in this time so that our year-end exercise, which happens to be the audit and the reconciliation part, that becomes smooth, less painful, and seamless at the same time. My dear participants, I'll start with one very simple question and we'll take it from there. There's one specific section that I'm going to mention, and that section is going to be section 428, subsection C. Section 428, subsection C is the precise reason why most of us have joined today and why most of us are sort of looking at future in a different manner than we used to do up till now. Any comments on what this section entails? Section 428C. Which act? Again, very important to know. I think this section itself would not need any introduction of any act. I think this section also in itself would become very crucial and something that you'll by heart very soon. Section 428, subsection C. So, any guesses from any participants what this section is all about and why it becomes very important for us in the coming times? Let's see. I do not see anything. IMS. Okay, that's one answer. Not the correct answer, but well tried. IMS is really getting important these days. From 1st April 2026 onwards, we'll have to comply with IMS more religiously than we used to do up till now. But no, 428 subsection C is not related to IMS. Any other guesses? Acha, let me drop a hint. Let me drop a hint. Yes. Very simple. It was announced in the budget itself today, in the budget itself, 1st of February 2025. What could it be? Sir and ma'am, it's going to change the habits of millions of accounting professionals. No, not cash payments. Sir and ma'am, this is the late fees on delayed filing of audit reports. Late fees on delayed filing of audit reports, which up till now used to be a penalty. Up till now, if your audit reports, which is supposed to be filed by 30th of September, got delayed, and you file those audit reports maybe in the month of October, November, or whenever as per your convenience. So there was a penalty which was levied. And as you all know, penalties are not automatic. AO needs to actually give you a notice for that penalty. You have the right to question that, or the right of being heard as to why you got delayed. So many a times you've seen these penalties are not taken very seriously by accounting professionals or maybe assessees. And whom to blame is not my question. Whom to blame is not something that I'm looking for. But this year onwards, the penalty is not there. So have they removed the penalty? Yes, they've removed the penalty. What used to be the penalty? My participants are going to tell me 1.5 lakh rupees. 1.5 lakh rupees used to be the penalty for this, and now they have removed this. So we're all happy now? We're all happy now? No, sir. They've actually converted that penalty into a late fees. And late fees is automatic, which means that 30th of September, you were supposed to file your audit report. You were supposed to upload your audit report, 3CD, 3CB, 3CA, 3CD. And somehow, for some reason, maybe the assessee turned up late, maybe due to portal glitches, maybe due to some other issues, the audit report could not be filed in due time and you got late. What will happen? The law says, Section 428, subclause C of Income Tax Act 2025, which is getting implemented in the next 6 days. It says that the assessee would be subject to a late fees of 75,000 rupees for the first month. And if the default continues to the second month and there onwards, 1.5 lakh rupees. We are now going to take that very seriously. And which is why we are not going to leave anything for the month of August and September. And it's a very serious thing that we must all delve ourselves into and get prepared for. So, which is why we have come up for this topic, which is year-end compliances, so that we may actually live the very famous doha of Kabir, who says, "Kaal kare so aaj kare so ab, pal mein parle hoigi, bahuri kare ko kab." So why delay anything when we can do it now? So year-end compliances, what are those compliances that we are looking forward? We are looking to some GST compliances, TDS compliances, accounts compliances. What inventory management can you do? And can you get yourself ready for the audit part? So we are now not going to chase deadlines, but beating deadlines is going to be our expectation for the times to come. So my dear participants, I am first of all going to cover largely GST reconciliations and rather GST checks, which are very, very crucial before closing of books. I am then also going to discuss some very important features of TallyPrime, which you can use for your year-end checks and to ensure that there are no exceptions or there are no unavoidable or sort of avoidable, I should say, transactions which hamper the final presentation of your balance sheets. Then TDS compliance also we might look into. Then depreciation, again, very important entries, fixed assets, the final value of what fixed assets are looking like, and then getting yourself audit ready. So are we all ready? We're all ready? Okay. Let's start with the GST checks. And meanwhile, I'm also going to look at the maybe some chats, and I'm getting all okay. Perfect. Let's start. GST check. First of all, sir, ma'am, I'm not talking about maybe a large corporation, but how MSMEs function. In the last few years of my experience, I've seen that what happens with the accounting is that in Tally, we are largely dealing with F4, F5, F6, F8, and F9. Correct me if I'm wrong, but to a large extent, the accounting only is confined to these F4, F5, F6, F8, and F9, which means the bank statement is thoroughly prepared, bank statement is readily prepared, entered into Tally, and all the sales vouchers are being issued, all the purchase entries are also being done. But at the year end, I'm not going to touch upon F4, F5, F6, F8, F9. Rather, I'm going to dwell upon F7, which is probably my most important function voucher for this consolidation, for this accounting period. My first and foremost humble submission is that throughout the year, we are making payments to different parties. We are receiving payments from different parties. We are issuing tax invoices. We are purchasing goods, and we are doing the purchase entries as well. We are also filing GST returns. My humble submission is that throughout the year, first thing that should be ensured is a very clear bifurcation of my input tax and my output tax. And that's my first submission that I'm going to put here. The first problem that actually comes up during audit is the GST reconciliation. And mind you, it is not the sales reconciliation. Reconciling the sale is very easy, and my dear participants are very much knowledgeable and very much aware about how to do it, probably much more than I can tell you. Sales reconciliation is very, very easy. GSTR1, you are filing your GSTR1, your books of accounts you are preparing. So you have all the details for GSTR1. Sales reconciliation is very, very easy. There's only one little small part of sales reconciliation that we need to do, and that is the adjustment of taxable turnover. That taxable turnover is very important because a few items are not considered turnover as per my books of accounts, but are considered turnover as per my GST. One such example, my participants are going to give me that what sort of a transaction is not considered sales or part of turnover as per books of accounts, as per financial statements, as per AS9, but it is considered a turnover part, revenue part as per the GST books. So one such example would be stock transfer. Yes, stock transfer. Advances. Advances actually are the other way around. Yes. Branch transfers. Absolutely. Absolutely. Exempt incomes. Advances. Yes. So my dear participants are already aware about this. My dear participants are well aware about this, that for this GSTR 9 exercise that we are doing every year, we have to take care of all these things. So I don't think that this GST tax sales reconciliation is a big challenge. Although it is a challenge, but most of it can be solved by thoroughly doing it throughout the year. Year end, the only thing that you need to ensure probably are debtors which are in negative. For example, for debtors from whom the payment has been received but invoices could not be issued, time of supply rules also have to be taken in care, but now invoices need to be issued before the year end so that your series does not hamper. So that's one thing that you need to take care. But what is my humble suggestion? And something which all of my dear participants and their colleagues in their offices, in their staff colleagues should take care in mind is that, sir, there should always be a very clear bifurcation between my output tax and my input tax. At the time of issuing a tax invoice, in F8, I should be mentioning output tax by default. I should not be writing GST at the rate 5%, CGST at the rate 5%, 2.5%, SGST at the rate 2.5%, IGST at the rate 5%. No. Very important to mention output CGST, output SGST, output IGST. Similarly, While booking any purchase entry, very important to mention input CGST, input SGST, and input IGST. Once you have done all of this in a properly, and religiously, I think your balance sheet should look like something like this. So I'm going to share my screen for a demonstration file. I'm going to share my screen for a demonstration file and tell me whether my screen is visible. Tally is visible on your screen.
Yes, Rupal ji.
Perfect. Now, my dear participants, if I miss out any question in between, please feel free to ask that question again. I'm definitely going to trying to keep this interactive. Before I start anything, a word of appreciation for Team Tally. I've been using Tally since 4.5, and I've also used Tally 5.4. I've worked on 6.3, 7.2. Some of you might have worked on Tally 8.1, then Tally 9, ERP 9, Prime release 1, 2, 3, 4, 5, 6, and then release 7. I must admit that the changes that have been brought in, the features that have been brought in, are very user friendly. Definitely, there are a lot of things that we can also improve in future, but one of the most significant feature that I found, which made Tally not just accessible by accounting professionals or experts, but by laymen also, is the find feature which appears right there on the dashboard. Right there on the gateway of Tally, the find feature which appears, which allows you to very quickly look upon anything that you need to find, so that you don't have to press DAL or maybe some other groups you have to search. One of the very fine features. I must speak out a word of appreciation for Team Tally on this. Also, since release 4, dashboards have been introduced. I think last CA Connect session was on dashboards, financial dashboards. Wonderful session that was. And dashboards have actually made the CFO level understanding of this thing possible. The decision making has been made possible. Now, coming back to my topic. Coming back to my topic. If I am properly and religiously doing my sales purchase entries every year, my balance sheet and the duties and taxes should look something like this. You're able to see my screen? So this is a brief of what my screen looks like if I am doing this properly and religiously. So I'll have a lot of input tax, input IGST, CGST, SGST on the debit side, output CGST, SGST, NHST on the credit side. When I actually look at the debit side and the credit side, while preparing the balance sheet, what do I do? Do I net them off? Do I net them off? No. This is where our own professional understanding should come into picture. If I open my input CGST, you'll see every month I have a lot of transactions. If I open this, you'll see there are a lot of transactions every month. If you'll see there are a lot of transactions every month. And these transactions are for purchase ITC that I'm booking on a regular basis. But what is happening? Ultimately, this amount keeps on getting accumulated. What your first year-end compliance should be is that you should be netting the output tax and input tax with each other. You should be setting off the output tax and the input tax with each other. And do not do that just by looking at the tally. For this, you should download the GSTR 3B from the portal. You should log into GSTR 3B first of all, and then go to GSTR 3B on the GST portal, and then look at how your adjustments have been done. Look at how your entries have been net off. I'm going to give an example. I'm going to share my screen with regards to GSTR 3B. I'm going to open a GSTR 3B on the portal itself, and then based on that, we are going to do a demonstration entry so that it becomes very clear. So let me very quickly open up my GSTR 3B. For the first quarter, for the first month, I am taking this example. Let me now share my screen. So
Rupal,
we're able
not
to, yes,
moving.
ma'am.
Yeah. So you now move to the government, the GST website, right?
Yes, I've gone to the GST website now. Perfect. So if I go to view GSTR 3B or if I download GSTR 3B, what I should be looking at is that this payment of tax. This payment of tax, and I should go right at this particular screen. Because this particular screen is all about my adjustments. Please take a screenshot, not of this. Don't take this screenshot, but please take a screenshot of your GSTR 3B every month that you filed and start doing GSTR 3B entries from there. What I have personally done, and for my benefit, I have created a new voucher type GSTR 3B. I'll show you in Tally how I am doing this. So this is my Tally screen. And on the gateway of Tally, I'm going to press DSS, which is going to take me to these entries. And you see, I have created this voucher type GSTR 3B. I've created this voucher type GSTR 3B. Creating a voucher type is very simple. You simply go to create voucher type and then type GSTR 3B. And although in my case, it already is there, GSTR 3B, let me write something else, entry. And then what sort of voucher type it is? Journal voucher. F7, journal voucher. And you simply press enter, 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 and save this voucher type, and you'll be sorted. So what will happen in your GSTR 3B? You should have exactly 12 entries during the year. 12 journal entries you should have. F7. This is the biggest part of finalization. And they should be exactly as per your GSTR 3B filed on the portal. And if you do this religiously, you're not going to be in any trouble. Let's pass a simple journal entry in this case. Let's go to voucher type. Let's go to voucher entries. Press F7. Go to GSTR 3B and 25 2025. This is going to be my journal entry for this month. So output CGST. What should I be taking? Output CGST as per my what is there as per my portal. So my portal, I'm again going to show my portal takes a different amount. This is my portal. So what my portal tells me is that yes, okay. So what my portal tells me is that I have 7862825 as output IGST. This is output CGST and this is output SGST. Okay. Output IGST, output CGST, output SGST. And how has this been set off? This input IGST, input CGST, input SGST. And then some amount still remaining. This amount was paid through e-cash ledger. This amount was paid through e-cash ledger. So what I am going to do is a very, very simple journal entry. I'm going to pass through this. And once I'm done with this, I'll show it to you again. And one of the, again, I must appreciate, very good feature in Tally now is that you can simply copy paste. So copy paste is a very good feature that Tally has introduced and probably is a lifesaver in many cases. So output CGST, SGST. Yes, I'm going to share my Tally screen also. But first, let me complete the entry and then I'll share the screen with all of you. Meanwhile, you can look at what my screen shows you, which is GSTR 3B. Now let's come to Tally. My dear participants, first of all, tell me whether you are comfortable with this or not. Debiting all the output liabilities of that particular month, we are all comfortable with? Done? Yes. This means that all the output tax which was credited up till now would now be debited so that it balances out. It balances out. Perfect. Now you need to credit the input tax which you have availed. Now you need to credit the input tax which you have availed, and that input tax you're going to take up again from the portal itself. That input tax you're going to again take up from the portal itself, and that I am going to take up now. And it could be in parts. It could also be in parts. It could have different entries. Why? Because there's a rule of cross utilization of credit. We are dealing with cross utilization of credit. And now I've done the entry of input IGST. I have set off input IGST to this extent. I am setting off input CGST again to this extent. Whatever my CGST balance turns out to be, and then input SGST balance. Similarly, input CGST and SGST balance happens to be same. There's no absolute rule that they'll be same forever. Now my balance is still there. What ledger should I be using for this balance? My dear participants are going to tell me what ledger should I be using for this balance? Yes, this is exactly what I wanted to tell you. Please do not use GST payable ledger. No, sir. Do not use GST payable ledger. Rather, use e-credit ledger, e-cash ledger. Please use e or electronic cash ledger. Create a separate ledger. Create a separate ledger with the name of e-cash ledger or electronic credit ledger and take it to current assets. And fill it up with amount every month when you actually deposit your GST. So every month you deposit your GST, pass a simple payment entry, e-cash ledger account debit to bank account. E-cash ledger account to bank account, pass very simple entry. And with this, you have done that part very, very, very easily. I'm okay with this part. And if I save this entry, my GSTR 3B output and input liability are now set off. And please look at this. If I go to TSS, I have GSTR 3B. There's this one GSTR 3B for the month of April, which has been set off. And if I now go to the balance sheet and go to duties and taxes, and then go to monthly basis, you'll see that, although this is a demonstration data, but you'll see that this balance actually nets out. And if there's still a balance used, there's still a balance left, that means either that input tax you have taken in books and not in 3B, or vice versa. You have not taken in 3B, they're in books. So that vice versa would be there if there's still a balance, which will indicate specifically and every month for you that there is a reconciliation which is need to be done. So that's my first and foremost humble suggestion, that please, sir, today is 25th of March. Please sit down, open your GST portal, take a screenshot of every month's GSTR 3B and pass this simple journal entry. This simple journal entry, which is going to make life very easy for you, which is going to make GST reconciliation very, very easy for you. First part of it. Let me see if there are any questions up till now. Yes, very good question. And that question is regarding RCM. Yes, of course, RCM has to be there. RCM will be there. And for RCM, we are going to maybe take this entry only, or we can do a very small adjustment. RCM definitely we are going to take up, because RCM again, and RCM, yearly RCM also we have to take up. So that is one question. E-cash ledger is also paid as CGST, SGST. Sir, that's up to you. E-cash ledger, you can keep it as CGST, SGST, IGST and cess also. Otherwise, e-cash ledger, one single ledger also, if you like to have, that also you can do. Why I say so? Because what happens if that there is a PMT09 case, which means that you have transferred e-cash ledger from one head to other, it will be easier to manage. It will be easier to manage. Also, when you download the e-cash ledger from the GST portal, then it also shows the consolidated amount. It also shows the total amount, and which is why you'll be able to match that amount with your e-cash ledger there itself. All right, all right, all right. Now, any participant who are putting up any questions? Yes. Can we refer liability input credit statement from GST portal instead of 3B? Sir, why I say so? Why I say so that you should refer GSTR 3B? Because sir, at the end, GSTR 3B is one statement which government, which department accepts as your mode of payment. Whether you have made a payment or not, GST payment or not, how does the government actually gathers the information? GSTR 3B. So you can alternatively use that liability statement as well. But I personally prefer GSTR 3B because it's easier to match, right? And I must also confess here that we are dealing in some subjective areas. Some of the participants, and we are dealing on national basis. So throughout India, some other person or some other esteemed knowledgeable member might come up and say that, look, sir, I have a better idea. And I'll be most welcome to that idea as well. I'll fold my hands and I'll say, sir, please enlighten me, because we are all learning. We're all learning. Nobody is perfect. Nobody is perfect in any manner. So this is my humble suggestion, is what I've said. But if any member suggests some other improvement as well, or maybe says that, look, sir, this is what you have propounded, but my theory is better. I have a better application to that. Most welcome, sir. Definitely, we are looking forward to that. Right? So let's move forward. There's a question, sir, कभी कभी books और credit ledger opening ITC match नहीं होता, उसके लिए क्या करें? Current year का नहीं. That's a very important question. Yes. Yes. So I think I'll take up this question of Rajnikant sir first. Rajnikant sir said कि input tax is taken in balance sheet. Input tax is taken in balance sheet in tally in the liability side. This way. In the liability side, input tax. Debit side of liabilities, mind you. But when we prepare balance sheet in Excel or maybe finalized balance sheet or audited balance sheet, that has to be taken to the asset side. Uska kya kare? What is to be done in that case? Now comes my first year-end entry that I'm going to ask you to prepare, and that year-end entry is going to be, maybe you can pass it in journal or whatever you feel like, that year-end entry is going to be electronic. Let's create electronic credit ledger and paste it to current assets and transfer the entire balance of input CGST, input SGST, input IGST to electronic credit ledger through that one single entry. Rajnikant sir, your problem solved. Sir, I think your problem solved. Done. Raju sir is asking, please show how to pass RCM rent, RCM freight entries. Sir, not just rent and freight. Not just rent and freight. Security services also. Legal services also. Sponsorship services also. And most important, if you're a company, director fees also. Very important to realize that these are all subject to RCM. And you cannot ignore them. Because once you ignore them during the current year, and then it comes to haunt you later in the later stages of your GST, sir, it will sit on your back and haunt you forever. So all these RCM places needs to be taken care of very, very, very crucially. Now, my dear participants, let's come to RCM. RCM is probably one of the most important and also neglected area at the same time. My humble suggestion is that let's not neglect RCM in any manner. I have a feeling, and if my participants are going to agree with me or not, I don't know. I have a feeling that all of us are paying RCM on freight in GSTR 3B. But whenever we are paying RCM on GSTR 3B, we are paying only on those invoices which are auto-populated, already there through GSTR 2B, and which are available, which are showing in GSTR 3B that this is, look, this is the liability that you have to pay. Is that the ideal scenario? Is that the ideal case? No, sir. Whatever is available in GSTR 2B for your RCM, that is only a part of it. A lot of RCM entries are not there in GSTR 2B. Lot of RCM entries are not there in GSTR 2B that you'll have to manually figure out. And that those entries will have to pass it on your own. For those entries, I again have a very humble submission. For those entries, I again have a very, very humble submission. Right, sir? What is that? Pass a simple journal entry for every time you record an expense which has RCM in place. What will happen in this case? So what will happen in this case? For example, I happen to pay legal fees. I happen to pay legal expense. Maybe rupees, maybe freight. Okay. Let's talk about freight. Maybe of how much? 1 lakh rupees. So what do? I simple pass this entry. Freight account debit to sundry. Maybe let's see if I have any sundry creditor. Is this my correct entry? Is this entry right? No, sir. This entry is not right. This entry is not right at all. Why? Because at this particular junction, I need to take care of the GST as well. And what is my GST? My GST tells me that freight 1 lakh is okay. I should also be debiting by input IGST. I'm taking IGST for an example. You could take another, some other thing. 5,000 rupees to sundry creator 1 lakh rupees and to freight to reverse charge on freight 5,000 rupees. Tell me whether this type of entry is okay or not. Please tell me whether this type of entry is okay or not. What will happen? Through this entry, your input tax gets increased. Your reverse charge liability is also created. What is the head of this reverse charge liability? Duties and taxes. Duties and taxes. And your input tax is also increased. Now, this way, your input tax is exactly going to match with my total ITC available in 3B and not just all other ITC. My dear participants would definitely be agreeing with me on this part that not just all other ITC, but total ITC would be matching with this. Let's agree with this, yes or no. Let me see if my participants have any other thing. Sir, Tally has a separate method to account RCM. In Tally GST report, it is not showing correct. Sir, it shows correct. It shows actually correct. Why? In this freight, na sir, alt enter, I think you'll have to do some corrections here. And GST applicability is applicable, sir. And specify details here. whatever HSN code is there, write HSN code. And taxability, yes, taxable 5%. Services, go to statutory other. TDS is not applicable, and TDS is not applicable. And you modify it from here and enable RCM. Tax type, enable RCM. Yes. Yes, RCM configuration. Parag sir has mentioned RCM configuration. Yes, exactly what we were talking about. Thank you, Parag sir. Yes, perfect. Can we book through journal voucher? Can we book through journal voucher? I think there was a question. I missed out that question. Yes, instead of RCM invoice. Sir, what happens in RCM? My dear participants are going to tell me. Section 35, CGST Act. I don't know if
I think there must be some power outage or something. Let me just call Rupal ji and confirm once. Yeah, Mr. Rupal is here. I think there must be some Wi-Fi issue. Yeah,
I hope I'm audible now,
yeah, you are.
audible and visible.
Yes.
Thank you, thank you. So there was instead uh, actually a problem at my end, but I hope that is resolved now. So we were talking about self-invoicing under RCM. That is correct. We have to do self-invoicing under RCM, and there is absolutely no alternative to that. I think Section 35 mentions about that, that you have to do self-invoicing, and this journal voucher is actually going to help you in that case, right, sir? Acha, there's this stat adjustment. Someone told me. Yes, 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 exactly. Yes. RCM also you can do. There's a lot of good features that you can actually uh, resort to in case of these RCM entries, right? RCM entries we have covered. Okay. Year-end GSTR 3B we have covered. GSTR 1 sale. I should definitely show you that if you go to this display statutory reports, GST reports, and then go to annual computation. If you go to this annual computation, you'll have these annual figures of your sales purchases. These are correct to a large extent, but there are of course some adjustments that you need to make. And I think in those cases, if you put in the nature of transaction very clearly, so your entire annual computation is going to be very, very close to what your GSTR 9 actually requires from you. So you will be very close to what your GSTR 9 requirement is there. Okay, it is taking a bit uh, of a moment to get loaded. Meanwhile, I'll come to the next part. I think everything up till now is okay. And yes, how will this entry look in GSTR 3B in Tally? Sir, very simple. You need to debit the reverse charge along with output CGST, SGST, and IGST. And that's the only correction that you need. Debit the reverse charge. Because again, RCM you have to pay through e-cash ledger anyhow. RCM you cannot be paying through any other mode. RCM you have to pay through e-cash ledger. So in that GSTR 3B entry, simply debit that part. Okay. So that one thing I've done. Coming to the second part. Sir, there's also some GST rules that need to be complied with. One particular instance I'm mentioning is Section 16 of CGST Act, second proviso, which talks about if payment to vendor is not made in 180 days, within 180 days, what we need to do? We need to reverse the ITC on that case. we need to reverse the ITC in that case. If payment to vendor is not made within 180 days or any ITC which we have availed, we need to reverse that ITC. And for that, there's a very good feature that you can exploit or use, and that is the overdues. That is the overdues feature. I think I'm just taking a minute here to get the screen loaded. Meanwhile, I should maybe take up to any questions, but I don't see any other question. Please throw in your questions, whatever you have, and I'll try to answer as many as possible. Okay?
Sir, there are two questions in the Q&A. If the payment is
Please.
received in duplication and vendors are not aware, what to do in such cases?
Okay. What largely happens is that when payment is received in this particular instance, it's very easy to identify because in that case, the annual first balance confirmation would mismatch. That's the first part of it, because you again have to obtain external confirmations and you have to get the ledger statements of the party. That is very easy to detect. And second is the negative ledgers. Why is it going to hamper negative ledgers? I'm going to take up that negative ledger in a moment. Is that your creditor or your debtor is going to appear with a negative balance. For example, if you have a Sunday debtor who has paid you twice, although I don't feel that such debtors would be careless enough to even forget that they're paid twice, but let's assume that happened. So when you go to negative ledgers, very easily you can find out that such debtors which should be in debit balance are actually standing with a credit balance. So any debtor which stands with a credit balance means only one thing: either the invoice is not issued, either the invoice is not issued, or maybe there's a payment problem. And in that case, detection of such duplicate entries becomes very easy, right? So I think that might have answered the first
Yeah.
question.
How to maintain the ITC ledger balance in the GST portal and Tally?
Ah, so this is what I've covered in the first part, that very important to segregate your output tax liability and your input tax credit rights, because output tax is your liability and input tax is your right. You create 6 ledgers with absolute no compromise on that part: output CGST, SGST, IGST, input CGST, SGST, and IGST. So when you have those 6 ledgers in place and deploy those ledgers wherever possible, wherever it is advisable, deploy those ledgers. Do not use GST at the rate 5% single ledger for purchases as well and sales as well. Please do not do that. And that is actually going to create a larger problem in the whole scenario. So that's the first part that I wanted to tell. Then, when you have those balances, you simply download your GST, your e-credit ledger. Maybe you do not need to do even every month if you're passing those GSTR 3B entries very religiously. If you're passing those GSTR 3B entries very religiously, I don't think you need to tally your e-credit ledger at all. Because then itself, your e-cash ledger, e-credit ledger, and the ledger balances at your dashboard, your GST dashboard, will automatically match with what is there in your GST tally scenario
Yeah.
with your balance sheets.
So, sir, your company is also loaded, I think. So we'll take up the other questions later on.
Sure. Thank you. Now, in case of, I think there's a question in case of cash withdrawal contra entries, how to record CGST and SGST input into bank charges. Now, first of all, bank charges. See, it's very important to realize the effect of Section 17(5) as well. Section 17(5), and this is something that somehow creates a problem for many people, that in my GSTR 3B, I have largely 4 components of ITC. 4 components. One is the all other ITC, which is available to me and I'm claiming. Second is the ITC on RCM, which I am also declaring as a liability in table 3.1. So that crosses out. Third thing is the ITC reversal. That ITC reversal also is something which is creating impact on my overall tax liability. But the fourth thing, which nobody is actually counting, is the blocked ITC. The ITC which appears in your 3B, in your 2B, but you are not claiming because it is blocked. Why that has also become a sort of irrelevant question in today's terms is because of the IMS. Now, since 1st April onwards, the IMS is going to be non-negotiable. In that case, the question of blocked credit 17.5 flowing to your 3B is something which is out of the question. But for earlier cases, and for 25-26, wherein you are closing your books as of now, there might be cases where you might have availed some ITC, which is not otherwise allowed it is blocked as per section 17.5. Sir, your simple task is going to be the reconciliation. That reconciliation you can do very well in Tally itself through the screen which is visible on your mobile phone or desktops as of now. So this screen gives me an idea of what my 3B entails. So this is my output turnover. And this turnover includes the advances as well. If I have put in that advances on which I have availed or I have to pay GST, and that is for service providers only. That is not for traders of goods and services. Goods, that is for services only. So in case I have advances on which I have paid GST liability, while payment of advances, for example, if I'm paying some, if I'm receiving some advance, while doing this entry of receipt, let's say I have some received in my SBI current account, advance from Tally maybe, okay? Tally advance. So this is my loans and advance or loan liability, I should say, deposits maybe. Then what happens is that I simply do this entry and then I go to stat adjustment. I go to stat adjustment. I click on advance receipt. I click on advance receipt. And then I type in here that, let's say, 5 lakh rupees of advance I have received. And now when I go to my annual computation, this annual computation should take care of the advances. I think it is not appearing as of now. I need to put in some entries as well. So it would definitely take care of the advance that I've received on which GST liability I have to pay. So it's very, very, very simple. If I go to stat adjustment and increase in tax liability through advances on account of advance receipts. Therein I'll put in a ledger. So this is my entry. The entry I'm going to put in is Tally advance. And 5 lakh rupees I have received. 90,000 rupees is going to be my liability, which I'm putting in. So to output IGST. So therein I've created some liability, right? So very simple way, these entries, sir, advance from debtors are not supposed to be charged on, GST is not supposed to be charged on advance from debtors. Advance from debtors is a separate issue. For traders and manufacturers. For service providers, even if you have received from debtors, advance from customers, there is going to be GST liability on that case, right? So I hope that much part is clear. Now, when I go to my annual computation, and that annual computation solves a lot of questions for me. But before that, I actually also need to clear out any sort of uncertain transactions, which I think I can see here that there are a lot of uncertain transactions, which once if I clear in, maybe I have a lot of uncertain transactions where tax type, tax liability is not selected. So once I've cleared out all these things, annual computation is going to be very easy for me. And that is actually going to clear out a lot of things through which I can match my reconciliation on a very easy manner. Coming to the second part. So I was talking about section 16, subsection second proviso, which talks about 180 days payment. How to identify such payments? Very simple. If you are maintaining bill-wise entry in Tally, very easy for you to maintain. What you can simply do is go to uh, display more reports, go to exception reports, overdue payables. And this is going to give you a list of all your overdue payables above 180 days. Above 180 days. So let's say if there's a overdue payable of above 180 days on which, let's say, this is the receipt. Right. So this is one of the payables. I've purchased something. I've also availed the ITC, but I have not made the payment within 180 days. Or the payment has not been marked to this. So I need to reverse the ITC in this case. And that is one crucial point that I need to adhere to. So ITC availment is not confined to the 4 rules of ITC that we have. What are 4 rules? Invoice. We must have the invoice. Supply must have been received. Tax must have been paid to the government. All pending returns must have been filed. Those are 4 initial rules. But even after those rules, there are a lot of things that you need to take in. Also, during the year, there could be some clerical errors from the accounting staff. One of the clerical errors that I could identify just by looking at it, in this case, if I went to duties and taxes, you see, I saw cess here. When I looked at input CGST, SGST, IGST, output CGST, SGST, IGST, I also found out there is cess of rupees 21,868. That should not have been there. Let me find out what this cess is for. And you see, if you look at this transaction, this cess is for purchase of office car. My dear participants are going to tell me what is problematic in this case. What is problematic in this case? In this entry, any problem that you can tell me? Yes. Yes, Manoranjan sir has absolutely identified the correct thing, that this is blocked ITC under section 17.5. I need to make a correction here. This is blocked ITC under section 17.5. I cannot avail the ITC of this amount as well as this amount. What do you do? Either make a correction here itself, or pass another entry. So if in your organization, the edit log is somewhat disabled, or maybe the edit log is heavily monitored, which disallows you from altering any previous entry, what you should be doing is, on the same date maybe, you should be passing another entry debiting office car account and crediting this input IGST and cess. Why it becomes even more crucial is because of the depreciation part. Someone might ask me that, sir, could this entry not have been passed on 31st of March? Yes, sir. If that entry would have been passed on 31st of March, one major problem that would have been there is that this would have the effect of allowing only half percent depreciation on the GST amount. Why? Because that would be after 31st of or 3rd of October, after 182 days, right? So pass the entry on the same day, make corrections, and ensure that you are not availing ITC on any product or any item which is supposed to be blocked under section 17.5. All right. So I think this, up till now, we have done. let's move forward to a few other things that the balance sheet speaks of and we must consider. If you look at my balance sheet, I'll take you to one very important part here, which is the incorporation expense. You see, incorporation expenses are written off, or preliminary expenses as they are known, they are written off in 5 equal installments. Assuming this is the second year of my existence. In the first year, I would have written 10,000 off. So 40,000 is the balance. Please note down, make sure, and make this entry, make this note. If you have any company which is incorporated in the last 5 years or so, and the incorporation expenses are still appearing as miscellaneous assets, please make sure that you write off 20% of those expenses on 31st of March. You pass a simple journal entry of writing off those expenses as on 31st of March. In my case, I'm also going to pass simple journal entry F7, which is going to be on 31st 3/26, which is going to be incorporation expenses written off 10,000 to incorporation expenses 10,000, and that takes my balance to 30,000. All right. So incorporation expense also taken care of, right? Now, before I actually move on to the other finalization part, any question on GST, if we have up till now, I'll be taking up any GST question if you have. You might put those questions in the chat box or maybe in the
So there are
Q&A.
few in the Q&A, if you can see.
Please tell me.
Should I call them out? Yeah. If we
Ha,
are registered,
yes, please.
if you want to have a look and see if what questions are relevant, that's also okay.
I'm not able to see the Q&A. Just give me a
Okay.
moment. Let me go to.
If
I can see. I can see now. I can see now.
if we are
So there are 8
registered
questions.
under
Okay,
MSME, then 45 days to reverse
45
is the
days.
GST. Yeah.
No. So a good question, Taj Khanji. Good question, but these are two separate issues. If you are registered under MSME, and more so if your vendor is registered under MSME, then you need to make the payment within 45 days as per the MSME rules 2006. There is no obligation of GST reversal for this. If you do not make the payment of your MSME vendor within 45 days, what will happen as on 31st March, if 45 days are lapsing and you still have not paid your vendor, MSME vendor, what will happen, sir, is that that expense would be disallowed. That expense would be disallowed under income tax. There is no GST provision with regards to MSME 45 days rule. The GST provision is for 180 days. Okay, sir? That reversal. So I hope that was answered okay. And then if you do not pay RCM, what are the consequences? Sir, if you don't pay the RCM, sir, the government is going to get RCM from you. And that's a big, big, big question. That's a big, big, big question. And probably if my colleagues who are filing GSTR 3B on regular basis, they might have seen some changes uh, in the last maybe 1 month or so. Now you are getting the tax liability breakup as well while filing 3B. Have you faced? Yes. This point, have you faced while filing 3B or while paying your tax, you have to show the liability that which month it is for. Yes, in the last return of February 26, Sarvina ji. Yes, absolutely. Now, why is that? Why is that? Interest liability. That is to counter the interest liability part. Because, my dear sir and ma'am, what was happening? That most of our tax professional colleagues, and I should not blame us only, the blame lies on the assessee equally, right? And it's not a blame game anyhow. We are all working collaboratively. But what happened? Every month, whatever freight you used to see in GSTR 2B and used to appear in your 3B for RCM, you used to pay every month. Every month, you used to pay your RCM as per what was appearing in 3B. And then in the month of March, we were sitting down, completing the balance sheets, opening P&L, seeing what freight amount we have paid in the entire year, seeing what legal fees we have paid, seeing what director fees we have paid, seeing everything that we have paid, and then booking that everything in the month of March itself. Booking everything in the month of March itself. That used to happen. Tell me yes or no. Yes. Essentially, you were delaying your RCM payment to the government. Should you be taxed? Should you be liable to interest or not? Tell me. Because you are delaying the RCM payment to the government, should you be liable to pay interest? Yes or no? Please tell me why not. If not, why not? Because RCM is payable in cash. Cash, I mean e-cash ledger. RCM is not paid through ITC. So what the government is now doing, it is asking you specifically whether you have paid this for which month, this month only or previous months. And if you say I paid for this month, please don't forget the time of supply rules. Time of supply rules. In case of goods, 30 days. In case of services, from the date of receipt, 60 days. All these time of supply rules. You cannot forget. Getting my point? So RCM, if you're not paying throughout the year, it is going to create consequences. Consequences would be one thing only, more penalty, more liability, more interest liability. So why not avoid that? Why not do our work thoroughly throughout the year? Why not be on our toes? Be proactive in that case. Okay? Right. Hari Danyal sir, exactly what I've answered. Director remuneration, RCM is paid. Acha, director remuneration, RCM is not to be paid in one case. Danyal sir, RCM is not to be paid in one case if that director is a full-time employee of the company. In that case, you are not paying fees to him. You are rather paying salary to him. So there's an employee-employer relationship. And employee-employer relationship is not taxable to GST. So if your director is, you have not sort of, I should say, deposited RCM on director's remuneration, make sure that you have also not deducted TDS on it under 194J. Because if you have deducted TDS on 194J, then RCM is definitely liable. If you have deducted TDS under 192, then RCM is not liable. All right? Ah, wonderful, wonderful, wonderful. If liability is immortal, why ITC has a short span? I must say that this is the quote of the day. And I love that quote. Maybe I am going to print that with a flex or a banner and put it here at the background. And it's a very well said. It's a very well said quote. I must definitely appreciate that if liability is immortal, why ITC has a short span of life? Wonderful, sir. Wonderful. All right. Let's move forward.
Rupal,
Yes, 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 yes.
sorry, I'm loving
Yes.
this session though. So just saying because we have 20 minutes in time. So first, I think let's cover the content first and then take up the
Done.
queries. Yeah.
Absolutely. Absolutely. So this is what happens when all the backbenchers sit together. So I think all my participants are also backbenchers only. They're asking wonderful, wonderful things. Now let's come back to what we are supposed to discuss. So I think ITC and reconciliation part we have covered. I've also covered what GSTR 3B voucher type we are supposed to make. That is also one thing. GSTR 1 reconciliation, I'm very happily satisfied that my participants, if you have any question with regards to GSTR 1 reconciliation, please feel free to ask me. And then second part is that your uh, 2B reconciliation, yes, you can very well do in Tally, 2B reconciliation. However, I would also suggest on a very personal basis that export your entire purchase register, get your GSTR 2B downloaded, then put those two Excels together, apply a macro, okay? Apply a macro there and very well reconcile everything. You'll have everything right there at the tips of your finger, okay? So that 2B reconciliation, you can very well do. Although if you want to do it through Tally also, wonderful you can do. Go to Tally, GSTR 2B reconciliation. And there you'll have all the 2B parts. Okay? Everything you'll have in Tally. Macro you can create yourself. Macro you can create yourself. So macro is basically for GST automation. I think we've had a session on that as well. Or maybe some other time we'll have. No problem. Okay, let's go to negative ledgers. Very important question, sir. Why do we have negative ledgers? It's all because of the issue that we have not done the entry throughout the year properly. I go to display and then I go to exception reports and then I go to negative ledgers. And this is the most important part. You see what you need to do. Again, I'm going to repeat DXL. DXL is going to show you negative ledgers. And what you do is press F4, go to group, and then select group one by one. Select all the groups one by one. I am going to take up sundry debtors first and look at the list. These are all my debtors which are in negative, which means which have credit balance. So credit balance indicates two things only. Primarily one thing that maybe I have not issued the invoice. Maybe I have not issued the invoice. And second thing, that even if I've issued the invoice and I've got the payment, maybe there's a duplicate entry of the payment or it has been set off. For example, if I open this party, I see 93,000 I've received only as advance. There's no invoice issue. So I still have 6 days to left. I can issue the invoice. And my dear participants are going to tell me, if I am a registered person with a taxable turnover or aggregate turnover above 5 CR, I am covered under e-invoicing. I am covered under invoicing. I have to issue invoices. So for 31st of March, what is the due date to issue invoices for financial year 25-26? Let me see in the chat box. Let me see in the chat box. Yes. No, Vikas sir. Manish sir is given the correct answer. 15 days, sir, you are being too strict with us. 15 days, sir, you are being too strict with us. अभी सर 10 दिन तो आपके बैंक ऑडिट में जाएंगे. 10 days you are going to go to bank audits. Right? So you'll get time only after 10th of April, after you have submitted all the reports. Then the due date is 30 days from the date on which you wanted to issue the invoice. Which means for any e-invoice which is supposed to be issued for financial year 25-26, the due date is 30th of April. You cannot issue any invoice after 30th of April for 25-26. I hope that's clear. Okay. Saurabh, you have raised your hand. You can type in your question. I don't know if you wanted to ask a question, sir. If you have a question, please type in your question. I'll try and answer that. Okay. So I go to negative ledgers here. I go to group and then let's say I go to sundry creditors now. I've seen about sundry debtors. Let's go to sundry creditors. And these are all my creditors which are on the debit hand side. These creditors are all there on the debit hand side. And most of the times there's a serious problem. There's a serious problem that I have received the amount from the parties, or I've paid the amount to the parties, but those amounts have been debited or credited to the wrong balance, wrong ledger, or maybe, let's say if I have a ledger called Rupal Enterprise, and there's a second ledger, Messrs. Rupal Enterprise. Does that ever happen to you? It must have happened. That you have two ledgers for the same company, and now you are facing a problem. So that part also needs to be taken care very, very, very crucially. For that, please look out for any negative ledgers that you have. Please look out for any negative ledgers. Because let's say if I have a negative ledger of Rupal Enterprise of 50,000 and there's a debit balance of Rupal Enterprise of 50,000, cancel them out. Pass a journal entry, simple. Which means that this had to be set off, or I've used a wrong ledger at some point, and now I'll be correcting that. All right. So I think we have covered that. Exception reports, we have covered this. One very important, yes, I must also note is that without any fail, yes, debtors wrongly labeled as creditors. Yes, that happens a lot. Happens a lot, definitely. Sarvina ji, thank you for that. One very important, I should say, in case, specifically in case of companies, but also in case of individuals, sir, provision for tax, income tax entry has to be booked. Provision for income tax ki journal entry has to be booked on 31st of March. Cannot be booked thereafter. So please sit down. Please sit down. Assess your tax liability. Assess your MAT liability in case of companies. Assess whatever TDS, TCS credit you have. Assess whatever TDS, TCS credit you have. Assess whatever advance tax you have deposited up till now. And please make a provision for the tax liability. Also deposit any self-assessment tax if you like to. Although 15 March was the date when you were supposed to deposit the fourth installment of the advance tax. But now please deposit any balance which still needs to be paid or adjustment entry made. Okay. Go to voucher entries for that and then pass a simple journal entry which could be in the nature of income tax, maybe 5 lakh rupees, or to provision for income tax. Okay. Very, very simple journal entry. You can pass. And this way, you'll have a liability created. This way, you'll have a liability created here. This way, you'll have a liability created in the balance sheet. And now, after this liability has been set off, for previous year, I'm talking about. For previous year, whenever your income tax return gets processed, for previous year, whenever your income tax return gets processed and you get the intimation, please pass a journal entry of that intimation also. Please pass a journal entry of that intimation also. Most of the participants are not taking that seriously. I'm very sorry to say. I'm very sorry to say. And not about just the participants that we have in this panel today, but accounting professionals in general. TDS entries we are somehow not taking up. Acha, sir, what is the group of this income tax ledger? If you are a proprietor, capital account. If you're a partnership firm or a company, then it is your expense. It's a deductible expense. Now coming to that very important intimation entry, which I have told. And I don't know, many participants would agree on this, that in case of large incomes returns for financial year 24-25, assessment year 25-26, assessment year 25-26, the returns have been processed in the month of March to a large extent. A large number of returns have not been processed up till February, were not been processed up till February, and now have been processed only in the month of March. And now the intimations are also being issued. So now that you have got the intimation, please pass a simple journal entry. that journal entry would be provision for tax liability would be debited. Your TDS, TCS, advance tax would be credited so that the balance equals out. If there's any income tax refund, along with the income tax interest, please book for that entry as well. And please book that entry separately. I'll show you one example. And that interest on income tax refund has to go to your indirect income. So this is example of that one entry. This is one example of that entry. I've got 4,50,000 income tax refund, the entire amount, out of which 4 lakh was my income tax refund of my tax liability, which was extra paid, and 50,000 was the interest component. So this 4 lakh rupees I am going to set off with my TDS, TCS, advance tax, provision for tax, and this 50,000 has to be my interest income. Okay. GST would be charged on this interest income, yes or no, my dear participants? GST would be charged on this interest income, yes or no? Please make sure to understand this GST, this interest income is not subject to GST. Okay. But for any other income which you have as indirect income, any other income which you have as indirect income in your profit and loss account, please make sure to charge GST on that as well. For example, I have, if you'll see my indirect incomes, I don't think I have any other income as of now here, because insurance charge, it's an expense. I should have debited this to an expense. I'll change the group, indirect expense, and loading unloading charges also indirect expense. I'll clear this down. And this is supposed to be duties and taxes. All right. All right. Sunita ma'am has a very, very, very interesting question. And I think probably one very important question, which is going to be very relevant for the coming days. Sir, your numbering pattern, your invoicing pattern. What is your invoicing pattern? Because all of us must start a new numbering series from 1st April onwards. From 1st April onwards, we're going to start with a new numbering series. For that, let's go to voucher type. Let's go to voucher type. Let's go to voucher type and let's go to sales voucher. Let's go to sales voucher. And you see, in this case, my method of numbering voucher is automatic. And I am going to set alter numbering details. And sir and ma'am, this is my numbering detail wherein I am adding a prefix here. I am adding a prefix here. So now what I'm going to do is restart numbering on 1st April 26. Okay. 1st April 26, I'm going to restart my numbering. And also 1st April 26, I'll have new invoice seriesing saying this 26, 27 slash. And now whatever my invoice number 001002, whatever that will be. Okay. I could have, or I could also have a suffix. All right. Got this point? Restart your numbering on 1st April. And this is the easiest way to restart your numbering. Okay. One important, another point. One important point. Sir, you also need to put in those adjustment entries of expenses payable. Please put in your audit fees payable as well. Okay. Do not forget that out. Although the auditor and the accountant are supposed to be different entities. Okay. Not going upon that. Let me see if there are any further questions which I should be answering. Suppose for my ineligibility, should I increase my liability or increase my expense? Increase your expense. Increase your expense only, because ineligible ITC should not have the effect of increasing your liability to any extent. Your expense should be increased. Expense or your asset. Okay. Parag sir's question was that. And what to do about old bills? What to do about old bills which are not set off? So, sir, there's a time period. The time period is November 26, by which you can utilize the ITC of invoices for the previous financial year. What is the entry of 160 reversal of common credit? Oh, wonderful question. Thank you for that question. I think I was about to forget about this one, but thank you for that question. Rule 42. Okay. Rule 42, we are talking about. Rule 42, 43, very important. You cannot skip those rules. Sir, assuming you have a aggregate turnover which comprises of your exempt turnover as well as your taxable turnover. All right. Let's assume your total turnover is 10 CR, out of which your taxable turnover is 6 CR and your exempt turnover is 4 CR. Now, for those inputs which are directly used for supply of taxable items or for taxable supply, you can avail 100% ITC. That's a rule that you already know. For those inputs which are used in supply of exempt products, you cannot use any ITC. That's also a rule which is very well known to all of us. But what about those inputs which are common in nature? Example, office rent. Let's say if I have factory rent, I've paid rent on factory on which GST is charged. I'm paying the GST and discharging the GST liability, but my factory is producing the taxable as well as non-taxable, which is exempt supply as well. So what is going to be my situation in this case? Rule 42 simply speaks of a pro rata formula. It speaks of a pro rata formula that whatever your taxable supply is, in that ratio, you avail the ITC of that part only. And now that becomes your most important job. Now it becomes your most important job. Because now what is going to happen? For any ITC that you have availed, because now you're standing at 25th of March, you almost are aware about your total taxable turnover and your total exempt turnover and your aggregate turnover as well. So you're aware about your total turnover liabilities in totality. Now you are in a very good position to find out what is the pro rata formula that should be applicable to you, or how much of common credit availment, apportionment you should be able to do, or you should have the right to do. If you have availed 100% ITC, now is the best time to reverse those entries, pass a journal entry, and reverse those expenses. What would be the expense? What would be the expense, or what would be the journal entry? For example, in my case, there's rent, and I've availed ITC on rent 100%. But now I've realized that since I have common credit for taxable as well as exempt supply, I should be taking only 40%, or I should be availing only 60% and leaving out the 40%. So for 40%, you need to do a reversal of input tax. What would be the journal entry? What would be the journal entry? The journal entry would be, anyone? Rent account debit 2. And what would be crediting? Any participant. Rent account would be debited for sure. Let me pass in the journal entry on my screen as well. Let's see if my participants are able to answer this. Rent account debit. Let's create a leisure rent. Okay. Oh, it is indirect expense. Rent account debit, let's say 50,000. What would be my credit? Wonderful, Sarvina ji, absolutely. Nachappan Chidambaram sir, absolutely wonderful. It would be the input tax that I've availed already. It would be the input CGST, SGST, or IGST. And now, before passing on the entry, I'm going to go to stat adjustment and write that this is a reversal of input tax. Why reversal of input tax? Due to exempt supplies, exempt and non-business supplies. I should write the assessable value as 5 lakh rupees. If you want, I can provide the GST detail as well. This is services. Any questions up till now? I think we
It's
covered everything.
4:30. Yeah. So I think
Okay.
the content is, I think, completed, right? We can take few questions.
Sure,
Yeah,
sure,
I'm
sure.
just
Definitely we
asking
can take
ki, I think whatever you had prepared for the session is already covered, right?
Yeah, more or less. I think we have sufficiently covered. Rest my participants should be telling if they have any questions with regards to this, because again, this is endless, and we could dwell upon it as the questions
Yeah,
comes in.
yeah.
So
So definitely, because I
right,
could really see how engaging the entire session was. It while it was like one person talking, but the comments and the continuous chat made it like, it's like a discussion going on. So that was lovely and great to see at our CA Connect. So just saying ki, because you've prepared this very important topic, and this will be uploaded in our CA Connect playlist also. So if you have like one important element or something which might have missed in session, I would request you to address that quickly or briefly as possible, so that we can conclude, so that
sure.
people can see. So there are certain questions on repeating those things, so I will say, in the interest of time, please do refer to the recording. It will be uploaded in a day or two, so you can see those entries again. So Rupalji, if anything additional you want to add to the today's discussion, we can do that maybe for and we
I'll just take one. I think I tried to answer questions, but I think there's one very important question of Ramachandran sir. That sir is saying, how do I make sure that if I pass bad dated entry, the number will not rearrange? So Ram sir, for that you'll have to go to the voucher type, and then the voucher numbering you'll have to change. I'll just give you a very small example in this case, that you go to voucher type, and I actually did mention voucher type quite a few times because I genuinely believe one of the very good features of Tally is that you can have as many voucher types as possible. F4, F5, F6, F7, F8, F9, they are basic classes, but you can have your own voucher types, and I'm sure my participants do it at their own end as well. And these are all masters of Tally that we are dealing here with. So they are not new to Tally. So they'll know everything. Let's say I'm going to sales, and you see, Ramachandran sir, if you'll click on retain original voucher number, your numbering series will not get hampered. Answer to your question, sir. You could do it for any other as well. You could have done it for journal voucher. Receipt payment also could have done. Yes. Right. Let me, I'll take another questions if possible. Uh,
let's take one or
mandatory to
two
reject
questions.
blocked. Yeah. Is it mandatory to reject block credit in IMS from April 26th, sir? Sir, what I personally believe is that if you're 100% sure that this is blocked ITC, you should be rejecting it. But in case when you do not have the invoice, let's try and keep it pending rather than rejecting it. Why I say so? Because in a large corporation, you could have n number of people who are doing all the procurements, and they could have different invoices which are not available at the account section as of now, but the account section later might get hold of them. And once you have rejected the invoice, there's nothing, there's no coming back from that point. So if you are 100% sure it's a blocked ITC, you can reject. But merely because you do not have the invoice, you should not be rejecting that. You should rather keep it pending. Right, sir? And I think Ramachandran sir's question was also answered. Uh, can I claim commercial vehicle input as input? No, you cannot. If you are in the business of using those commercial vehicles as rentals, maybe as a taxi service, or maybe you're selling, purchasing those vehicles, you can, otherwise not in other cases. Right. I think I have covered the questions. One last thing that I would say is that this process is continuous, which means that whatever we have covered up till now, there could be a number of things that also we could have covered. There could have been a lot of things that might come up as the government progresses, as the features progress. And the best thing is to realize that all of this is a dynamic. All of this is dynamic space, which means that we are not static. Like in 1494, Luca Pacioli, someone who came up and said the rules of debit and credit are such and such. And now 530 years later, we still not do not question those rules. Accounting and taxation are two separate domains, right? And we are dealing in such cases where we have to deal with both of these things. One is static, one is dynamic. So we have to keep a balance of all those things. We have to keep ourselves very, very dynamic in any case. So kudos to all of you who have joined. And thank you, Komalji and Team Tally, for having me in this session. It was a lovely, wonderful interaction with dear participants. And if you have any other points to please make.
Yeah, thank you so much, Rupalji, first for this really very important topic. I think I asked you, okay, will this topic be relevant? And you did mention it will be very relevant. So, rightly so. And today, I think I would love to add a bit on the audience also, because it's a CA Connect for the CAs and by the CA. It could feel that the discussion is a very intellectual one. Everybody knew what is going to come up, and it was so good to address this. So thank you so much. It was very, I would like to say, entertaining as well as very insightful. So I'll make sure that the recording gets uploaded. So the questions which some of you wanted to see on repeat, you can refer to the recording. Thank you so much, Rupalji. Definitely, we are going to disturb you now that you're part of our community. Thank you so much for your time. I will now end
It's
this
a pleasure.
session.
Thank you.